Hi everyone, this is Rob Roy from Elliott Wave Options with a special U.S. market update. Danger, Will Robinson, danger. And kudos to you if you know what old TV show that came from. Kind of dating myself here, but it does apply. Just a couple days ago, we talked about how low could they go when we were talking about yields, and I did mention that if rates drop below that 161.8% fib extension, it would not be good for the market, and watch out below, and you saw what happened today in the market. Unfortunately, this does compute. Another reference to that same TV show, but with the drop in the market, you saw, which was preceded by the inversion in the yield curve today, rates dropped, and when you hear that, this one was the 2s and 10s. Now we had the 3 and the 10s inverted a while back, and so we talked about that, but this is a big one. 2 and 10s, meaning that you actually earn more money for holding 2 years versus 10 years. And that doesn't make a lot of sense, does it? And it has a unblemished record for forecasting economic recessions in the future. And that's what got everybody freaked out today and why the market went to the downside. And let's take a look at the chart. So as we can see from the chart in the market, even as bad as it was today, the positive news is that we still haven't even taken out the lows that occurred back on, I believe that was the 5th, the 5th of August. So there's a positive, but when we look at the chart, here we go. Here's the rates that dropped on TBT below that 161.8% fib extension. Now the positives are we have a gap here and a gap here, and we know those gaps will get filled because gaps get filled, but we don't know is when. So how much lower are rates going to go? How much lower is the market going to go before things snap back? Now hopefully we get rates to snap back and snap back quick. It wouldn't hurt to have the Federal Reserve come in with an emergency rate cut. There's a 100% chance that they're going to cut again in September, but that's a long ways away. The next Fed meeting in September, and a lot of damage could be done to the market. So let's see if the Fed steps up with something. They were, and President Trump was actually right on this. It wasn't just that the Federal Reserve was raising rates, because you look at 25 basis points here and there is not a big deal, but they were withdrawing a lot of liquidity from the market because they were offsetting their balance sheet. And so they were actually pulling liquidity out of the market by rebalancing their balance sheet. And that was a big deal. And so that's what you see. You get August, which is a low volume time. You have thinly traded markets. You don't have as much liquidity. And these are the types of things that can happen. And it could get worse from here, and it could get really ugly. So we need to see those rates jump back and jump back fast. Take care, everybody.